What's going on, guys? Abdel Khawatmi, Paramount Residential Mortgage Group. It's been a while. I hope everybody have had a blessed day. Happy New Year. What is going on with interest rates? A lot of changes happened since the beginning of the month. A lot of different things that we anticipated, right? Fed announcing back in November, they're going to start tapering. They met again in December, announced the same, and then they're meeting again today, not that long ago, in about an hour. So what I really want to talk about today is just give you a clear understanding of what's currently happening in the market, what's going on with inflation, what is exactly to be expected heading into the next couple months, so we can accurately give that explanation to our clients. So the first thing is that the Fed discussed that they're going to be hiking their benchmark fund rate faster. The market estimate's actually showing a 76% chance of the first hike happening in March. So the Fed funds rate is the interest rate for overnight borrowing for banks, not the same as mortgage rates. So what does that basically mean? If you guys remember back in 2020, during the heart of the pandemic, right, the Fed started buying about 40 million mortgage-backed security and 80 billion in treasuries each month so they can inject liquidity into the market. Well, these ongoing purchases, the whole purpose of it was to stabilize the market so we don't go into a crash. The recovery has proceeded, and over the last year, they announced they're going to start tapering and buying back since last February. They first said that they were going to start buying back less by 15 billion a month, and then in December, like I had just said, they decided to actually speeden up the buying back of mortgage bonds from 15 billion to 30 billion. It's kind of unclear now the balance sheet of what the Fed has, almost an $8.8 trillion balance sheet that makes up. What they do is they receive money from bonds, they hold it each month, and they take it and reinvest it into mortgage-backed securities, almost 70 billion a month. What's going to happen is the balance sheet is going to run off. In the last meeting that the Fed had, they said that they were going to reduce the balance sheet after they start to hike up their rates, which we'll start seeing a lot more into April and June, starting with March. You're going to let mortgage-backed securities kind of run off. This is going to stop reinvestments altogether and allow a fixed amount to fall off. The Fed announced once again that their balance sheet has impacted the equity and bond market. The timing of when the Fed starts doing it and reducing their balance sheet, like I said, we'll see into March, April, which again should allow mortgage bonds, allow the stability, and keep the rates stable from there on. Let's not forget some of the appreciation levels that came out year over year. Rents jumped up almost 18% from value. So keep that in mind if you're a consumer. When you get a mortgage, fixed, never changes. When you obtain a home, though, a consumer who bought a home in 2019 and 2020 into where it's at right now, they gain almost 20% of instant equity. That's unheard of in any type of investment that you do, whether it's stocks, crypto, anything of that nature. You keep 100% of your home appreciation all yours, as opposed to stocks or crypto, goes up, goes down. 100% of home appreciation you're getting, and you can buy a home for as low as 3.5% down or 5% down. Whether interest rates are higher, lower, or at the median, let's not forget the national average for interest rates is almost 6%. We're still way under that, close with the benchmark right now being about 3.5, 3.6%. Keep that in mind if you're a consumer. If you have any questions whatsoever, my team and I will be more than happy to help. Again, Abdel Khawatmi, Paramount Residential Mortgage Group. Any questions, contact me directly, 201-679-0422, or you can visit my website, www.gotmortgagesnj.com. Thanks for tuning in, guys, and I'll catch you guys next time. Have a great day.